Hey, what's going on, guys? My name is Richard Moglen, and welcome to this week's Stock Market Outlook video. And before we get started, I do want to cover a few housekeeping things. The first is to thank you guys so much for 1,000 subscribers. We reached this past week, and it's awesome to see how this community is growing. And really, I just want to keep fostering a place where people can learn about stock trading and kind of grow together. So thank you guys so much. And as a thank you, I do want to give away one more copy of How to Make Money in Stocks by William O'Neill. So to enter, all you have to do is comment something that I'm going to ask you later on in the video. So make sure you watch until the end to be entered to win. The other piece of housekeeping is tomorrow at 1 p.m. I'm going to be building my watchlist live. So you guys will be able to join me, ask me questions about specific stocks, and kind of watch my process as I go through and create my watch list for the week. So that will be at 1 p.m. tomorrow Eastern time. So feel free to come hang out and talk stocks with me. But now that we've gotten all that stuff out of the way, let's go ahead and talk about the state of the market and analyze its performance during the previous week. So as always, we're going to start with the IBD Big Picture article. And overall, if you're paying attention, we had a bad distribution day this past Friday as news broke that the second case of the coronavirus appeared in the US. So we actually were making some solid gains in the beginning of the day with the NASDAQ up 0.5%. But overall, across the board, the indexes closed about 1% down. So that definitely wasn't a positive. However, we did have some important earnings come out with Intel up 8% on that. And we have some important earnings coming up during this next week with Amazon reporting, Tesla reporting, and Apple reporting. So some big companies there that could kind of shift the overall trend of the market if they report bad or good earnings. So stay up to date with those earning reports. And also, of course, if you're going to invest in any new companies, you need to know when that earnings report is going to happen. But overall, they talk about some other good earnings reports, such as Team. And in the end, we've got the current outlook still being a confirmed uptrend, but we've got one more distribution day on the S&P 500, but we still have two on the NASDAQ. So that is kind of the overall picture from IBD. We are still in a confirmed uptrend, even with the distribution day this past Friday. Now going over to wishingwealthblog.com, you can see that the GMI signal is still a green. However, you should be aware of this kind of metric over here that Dr. Wish posted about. He kind of keeps track of the length of the uptrends and downtrends to kind of see statistically where they usually end and how long they last. So overall, we're now in the 70th day of this current uptrend. And you can see that only 6 out of 94 QQQ short-term uptrends have lasted this long. So this is something to be aware about. It's not a reason to sell your positions right now. Just as always, you should have a plan and rules that get you in and out of the market. You can use the GMI, the IBD Big Picture, but the important thing is that you do have rules and you follow them. So overall, you've got the reports from IBD and wishingwealthblog.com that we are still in a confirmed uptrend, but there is some recent weakness. Today, I also want to talk a little bit about the sentiment surveys that I've been posting on Twitter. And if you don't follow me at Richard Moglen, you definitely should. The link will be in the description below. But anyway, each and every Friday or during the weekend, I post kind of a survey kind of gauging the current sentiment from all the different traders on Twitter. So I have 3 different options that the NASDAQ 100 will close higher the next week, about the same, and lower. And the point of this is to kind of see whether or not this is a contrarian indicator, meaning that if everybody thinks it's going to go higher, that it will actually lose gains during the week. So far, the results have actually been pretty mixed. This is a pretty small sample size, but I will try to continue to do this each and every week. What is significant, though, is that this past week, we had the lowest percentage of people who thought the NASDAQ was going to close higher. So these kind of extremes are important to kind of identify, because if it's 90% of people think it's going to go up, it probably will go the other way. And likewise, when it's so low, below 20%. So just another thing to keep in mind. But now let's carry on with the analysis of how it performed during the trading week. So starting off on Monday, we had kind of a reversal day. It's opened around 223, went down a little bit, but then by the end of the day, fully recovered and closed above the open. So a positive day on Monday. Then on Tuesday, we gapped down a little bit, but then once again closed higher than the open, so another positive day. However, on Wednesday, we had a sign of weakness where we actually closed below the open. And on Thursday, we recovered, and on above average volume, we closed strongly above where the open was. And this brings us to Friday, where you had the first big drop in a while on above average volume. And we opened, actually, we gapped up, but then we closed near the low of the day. So once again, this is a negative sign, but it is the first distribution day in a while. And as of right now, the number of distribution days isn't enough to really be worried. So that is the analysis of the QQQ. And looking at the SPY, you've got a very similar pattern. And actually taking a look at the Guppy chart, which is always helpful to look at, you can see we're still in this clear red, white, blue uptrend. So nothing too scary here, nothing to be worried and selling all your positions about. But as always, it's good to stay up to date with how the current market is doing. So now taking a look at the Russell 2000 index, the IWM, you can see it is a lot weaker than the SPY and the QQQ. This past week was all selling, which is a negative sign. You want to see the mid caps actually increasing with the overall indexes. So this is another sign to be worried. And on Friday as well, you had a gap up open and then a close a lot lower than the previous close on Thursday. So we're still kind of going flat on the IWM, and really for an easy money environment, you want this to also be an uptrend with the QQQ and the SPY. Now, as always, the last ETF we're going to look at is the FFTY, which is the IBD 50 ETF, which has actually been outperforming the SPY in the early part of this year. However, we did have on this past Friday another big selling day, which shows that a lot of growth stocks probably got hit on this past Friday, such as AMD. And once again, this isn't a positive sign for the market going forward, and we may be due for a pullback. However, it's important that in these times when there's a little bit more volatility and the overall indexes are down, that you look at the top stocks that are performing well, even though the overall market isn't. And that's why it's actually a good thing to have a pullback once in a while, because you can see the strength very clearly. For instance, SE has been just taking off since this breakout day here. And this is showing significant relative strength to the overall market, which identifies something special about the company. So now that we've talked about both the indexes and the IBD big picture, let's go through each of these top growth stocks from my watch list this past week and kind of analyze how they performed throughout the trading week. So starting from the top, we've got Axon, formerly Taser, and let's turn on the drawings. And you can see that on Tuesday, or actually on Wednesday, it broke through the green line and had a green line breakout. And it's important with green line breakouts that you look at how they perform in the next couple days. You want to see follow-on volume, which is just what we saw here. We saw a down day on Thursday, but then a strong day on this past Friday, which is even more significant because the overall indexes were down. Overall, we had almost a 10% gain during the trading week, which is almost the best. SE performed a little bit better, but very, very good to have a 10% gain in 1 week. Next, we've got AMAT, which is still in this consolidation here and had a very weak day on this past Friday with a drop of about 3% on above average volume. So still not seeing a lot of movement from AMAT, but it's still a pretty good stock, and I'll be keeping it on my radar. Next, we've got CDLX, which is still below this line of resistance here, But I really like this constructive pattern here. It's really tightening up and just kind of going sideways, not really dipping too much. And for me, this looks like a very strong chart pattern. I first talked about this stock around here, and since then it gapped up about 25% and now is forming another constructive chart pattern. So this will still be on my watch list, and it's a really good stock to be looking at for a possible position. Next, we've got Dexcom, which is still below this line of resistance here. And this past week, it just kind of went sideways with overall a gain of 1.4%. But it's still a very strong fundamental company, and it will still be on my watch list for this upcoming trading week. Next, looking at Garmin, you can see a failed breakout where it broke out on this past Tuesday, but then fell kind of right back into the base. And that's not a positive sign. That's not what you want to see. You want to see a stock carrying on its move and having as many up days on volume as possible. And the only really constructive part of this is that you had the breakout with above average volume, and the fall back into the base was on below average volume. So if this reverses once again and you see another breakout on above average volume, that would be a positive sign. But overall, this kind of just went sideways this week with a gain of 0.44%. Next, we've got PFGC, which again just kind of moved sideways. You had an attempted breakout here, but then once again, it met resistance at this 52.68 level and then just kind of fell right back into kind of the flat base that's forming right here. PFSI is once again still just going straight under this 34.67 level, but it is a pretty good fundamental stock and it will still be on my watch list for this upcoming trading week. PRNB also, you can see just kind of dip back down after this breakout on Friday the 17th. So again, this isn't a positive sign, but it's just kind of still in this kind of sideways movement here, and it has yet to make a decisive move upwards. RD&T, you can see, is another successful breakout this past week. You had a nice increase on this past Tuesday, and then 2 follow-on days on top of that. And this Friday, you can see there wasn't that much selling, and everything is below average here, and it almost recovered to where it opened. So a good sign from RD&T, and overall it gained 3.33% during this trading week. Next, we have Safe, which was another successful breakout through this resistance here at 43. And you can see that after it broke out on Tuesday, it had one dip day, and then it carried on towards the end of the week. And again, it's showing good relative strength to the overall market because on this Friday, it did make some small gains. Next, we have SE, which was our most successful stock this week with an overall gain of 10.53%, which isn't bad in 1 week. And you can see it gapped up on Wednesday, the 22nd, and then had 2 strong follow-on days. Ideally, this would be an open around here and then a close above the open near the high of the range. But still, the fact that it actually increased on the past Friday on above average volume is good because of that drop with the overall market. So really promising things from SE, and it was the best performer from my watch list this week. Next, we have Sedge, which also broke out and then had a couple carry-on days. Although on this Friday, you can see it closed pretty far from the high of the range. But overall, still good relative strength because it was up on this past Friday, and it's acting very well since this cup and handle pattern right here. So this is still a very good stock to look at. It's got great fundamentals in the energy sector. Next, we have TTD, which is also forming its cup and handle pattern here. And like I talked about in my watch list video, it could be just kind of forming another handle right here before it makes a decisive move through the green line. But overall, a leader in the software sector, and I would look for a breakthrough the green line or the top of the handle plus 10 cents on above average volume. Next, we have VAC, or Marriott Vacations Worldwide, which was our second worst stock of this week. And you can see a bunch of negative signs here because it's broken through this kind of flat area here on above average volume on Tuesday. So not good things from VAC here. And you can see it tried to recover here with a Bollinger Band bounce, but then on this Friday, it just got hit. So This will most likely not be on my watch list for the upcoming trading week. Next, we've got VBTX, which again didn't do too much this past week. It tried to make some gains and kind of approach this level here, but then on Friday, it just got shot down on above average volume. And finally, to round things off, we've got XP, which I thought was going to be a very promising breakout during this trading week when it broke out on Tuesday and had a follow-on day on Wednesday. But instead, it kind of fell right back into the base. And that's to be expected. It is a more volatile stock because it is a recent IPO, but it is still probably going to be on my watch list because of its strong fundamentals. So overall, that is my analysis of the stocks on my previous watch list and on the major indexes themselves. I think you have to be ready for a pullback next week, but if you have rules to get in and get out, you'll do just fine. And this brings us to the end of the video and for the giveaway of How to Make Money in Stocks by William O'Neill. If you haven't read this and you're interested in swing or more long-term trading, I think you should definitely check this out. And to enter to win this copy, all you have to do is comment down below what types of videos you want me to make in 2020. So let me know what you'd be most interested in, whether it's stock analysis, strategies, indicators, that type of thing. But that's it for this video. Thanks so much for watching. Make sure you tune in to my live stream tomorrow where I'll be building my next watch list from scratch right in front of you. So thanks so much for watching, and I'll see you guys in future videos.